let's do a trade recap on this one. So the reason why I took this trade was because this is my bread and butter right here. When we dip below the daily 50% of the range of the previous day, then it happens to match up with the weekly 50% range. Smart money buys in a discount, sells in the premium. All right, so we traded down into this 4-hour fair value gap right here in blue. It's bullish. It's a bullish gap from back over here. Then we traded down below the 50% of the weekly and the daily, the exact same line. First thing that I saw as confluence, right, was we broke this breaker block right here. So that's your market structure shift. Then we immediately, see how the candle closed here? We immediately tapped right back into the breaker block right here. Now, as tempted as I am to get into this trade immediately, because you see, this thing, when it goes below the weekly and it wicks in like this, it just wants to go. So I had to remind myself that I have restraint. I was waiting for the macro, which is my rule. What I wanted to see was some confluence. And what I did was I drew out so I grabbed my GAN box, went to the low here to that high here. It traded below the 50% right in here. As you can see, it says 0.5 and respected the PD array once again. So it came back essentially in this case to some form of an order block here and or this breaker block. Now, that was confluence for me. So now I'm ready to get into a trade over here on this green line where the macro is. I am looking for a form of displacement over this breaker block. And you can see we have it right here. We have this major displacement here. So as soon as we blew through this breaker block right here on the left, we displaced through it right here on this candle. Now I want to show you, and I'll start showing you now on multiple occasions, how to scale in. Now, what does scaling in mean? It actually means taking multiple entries on the same trade. And we're going to go over that on this trade here. So the way you would scale this trade is, this is normally where my second entry would be. However, we weren't in a macro and I stick to the rules because you never know if this thing right here, this is always your biggest fear, is the initial rise up. Can you see how we've just taken part of this fair value gap on the 4-hour? So obviously, your initial fear is the market to come up into this SIBI down fair value over here, go into it and come down and take at least 50% of this 4-hour fair value gap, taking the liquidity from here and then going up. So that's why I really wanted to wait until we're in a macro to solidify, because price is time-based. All right, let's talk about scaling into this trade and how to do it. So if your target is up here and the bottom of the run is right here, you take 50% of this range that you're trading in and you mark in the 50%. As you can see, I already have it. But the reason why you want to do it that way is because you don't know if price is making a retracement, because when it makes retracement, it will go to the 50% or to the 618, right? Your Fibonacci retracement, and then it will continue on the down. So you want to make sure that at that point, you've already scaled in all your entries. What you do is you always look to the left and you're breaking highs and looking for displacement over old breakers and mitigation blocks. Now, a general rule of thumb is I don't scale into trades unless we've taken out major key areas and I believe that smart money wants to get involved. So now I've drawn this breaker block right here to the left, and you can see price broke it and displaced through it slightly right here. Now, does it have to displace? Not necessarily, but if you're unsure, wait for displacement only. So on this candle right here, you have the market structure shift and break of that order block, breaker block right in here. It closes right here. So as soon as it does, it makes another jump up in a minute to here. So what you do is you take your GAN box out and you go to the last low. That's the high, and this is the low, the last low of this run up to here. You move your GAN box to the high. You don't know that's the high when you're trading, so you can just leave the GAN box in, and you just adjust it to the high, and then see it comes down here. And what you're looking for is you're looking for another buy below the 50% mark, which is right here, of this run right here, this low here, to that high up here. So your second entry is a long position, and you would put it on this fair value gap in here. You target a 1 to 2. Now, your stop loss, you have to be careful with these. Your stop loss, you want to put it, if you can, below the low. So in this case, here's the low, here's the high. If you can get it, if it's possible, put it on the low right here. You should technically be a bit of lower just in case, but there's an order block here. You should be okay. So this one is another 29-point stop. So you do these all at 1 to 2 to be realistic. You can see the 50% of that range is right here. That's the 50% of your take profit and to your entry. So you do not want to scale above that in case it makes its return right here. So in this case here, you can see price is already traded above it right here, but you don't know that this is the point in which it wants to make a reversal, right? This is the 50% mark here, and you can see price is displaced here over this breaker here. So in this scenario here, we only have a 2-entry model. Scaling up like that can really improve your account. So the final take profit on this was the 1-hour high, which I have marked in right here. So we got in somewhere right here, target this high. That's a 269-point run. So if you're unsure about the first trade right here, you can take this one right here, which I did at 1 contract. You can take the second trade here at 2 contracts. This one is your 1 to 2. Now, it doesn't have to be a 1 to 2. It can be more. Like in this case, your 60 points is here. You would actually take it to the 50% mark, but I just put it on this fair value gap over here. 60 was an easy number, a 1 to 2. So let's go look at another example of where you can scale in. So again, we had wicked this weekly 50% exactly right here. And let me show you how to scale into this trade. So here's your first trade. You're running to the 1-hour high. So now we need a 50% mark of the run to scale in. So from the low to the high, here is the 50% mark of the run up, which is 50% of the run up. So you stop scaling at that point on this blue line. So we come up right here and we displace here over this breaker, go back to the bottom of the range. So you take your GAN box, go to the last low, the last high of the range. And you can see we wick the 50% right here. So your second entry, make sure it goes to 50%, put it below the fair value gap because you expect the fair value gap if price is bullish to respect it. 28-point stop to here. Because it is an order block, you might want to put it just a little bit more below a point or two. You would still target your 60 points. In this case here, you could bring it to this high over here and you have a 70-point run on this one. So this one, depending on how you do it, you could take it 1 contract, and on this one, you could take it 2 contracts. And you can just let this one run all the way to the top and get your 239 points because you're not worried because you already secured 70 points on this one. One thing I need to mention is as soon as you enter this trade, which is right here, this trade here is already at break even. So when you enter this trade, because you've broken this high right here, right there, this one goes to risk free. All right, here we have our third entry that you could potentially take. So after you pull back, you took this entry right here. Okay, this becomes the mitigation block here, but you're actually looking over to the left. Your third entry could be off this breaker right here, which is a little bit hard to see, but you can see there was a change of state right here. We actually break this mitigation block here and break that breaker right here, right here. So what you do again is you adjust your GAN box to the low to the high, and then your entry would be below the 50% mark on your third entry, right in here. Stop loss going quite a bit below the low right of the last low right here. So we'll put it at 26 points and target 50 points. This is the 50% of the medium. So you have a 1 to 2. So in this trade here, you have a massive run that you get. You get a 1 to 2 and another 1 to 2, right? So you're looking for inversions. You're looking for breaker blocks. So all you really want to do to make this actually really simple, all you want to do to make this simple is when you get into a trade, mark all your breaker blocks in. Breaker, breaker, breaker at 50%, which we ignored. Guys, I hope this video makes sense on how to scale in. I will continue to do more videos on this. Thanks a lot for tuning in, guys. Stay tuned for some more great videos coming up. Thank you. Have a great day.